Happy Tuesday, traders. It is the 18th of February, 2020. This is episode number 1694. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance, not necessarily indicative of future results. This morning, market sentiment overall is, it's mixed. Leaning risk off this morning, crude being the weakest link here. Crude trading at 51.31, down $1.01 or 1.93%. The DAX is off 102 and a half points, 0.74%. The Nasdaq's off 52 and a quarter points, 0.54%. The leader today is gold. Gold making a ramp up to 1,600 yet again, up $8.60 or 0.54%. The bonds are up 26 ticks, the U.S. bonds. The dollar's up 27 ticks, and the 10-year note's up 9 big ticks. So risk on sentiment coming into the session today. Of course, yesterday we had the President's Day, or George Washington's birthday here in the United States. And so the markets were really off. You'll notice on my charts that there are no bars representing yesterday's action. They just completely get removed. It very not a very meaningful session and not very meaningful volume there yesterday. So that's where we stand. Looking at what's scheduled, we did get some key numbers overnight U.S. time. The Great Britain released its claimant count, came in at 5.5 thousand versus a forecast of 15,000. That's better. The zoo came in at 8.7, disappointing, less than half of the forecast of 19, the German zoo figure. And we did get a low tier number a half hour ago here in the US. The New York Empire State Manufacturing came in at 12.9 versus 5.1 expected for February, much stronger. And then looking ahead, we have NAHB Housing Market Index at 9 Central, 10 Eastern, expecting 75. We get Fed's Kashkari at 1 Central, 2 Eastern, and then the tick flows, the net flows and tick flows at 4 p.m. Eastern, and then this evening at 6:50 p.m. Eastern, we get balance of trade out of Japan. That's what's up on the calendar, what's planned. There's also the ECOFIN meeting in the Eurozone today. So that's where we stand. I'm going to spend very little time on the review portion. Friday coming into the session, the expectation is for the market to dip down into being that it was opening in balance. I expected it to dip down into the 3370 area, bounce back up and push for a test of the high, but not likely to go anywhere. Overall, did not expect much of a push on Friday. The secondary scenario is to open, test that 84.75 and the overnight high, and then dip off, drop back into 79, and then drop into 70. Overall, expected a balanced. If you look at both plans, expecting balance for the day. Here's what we actually got on Friday. Let me turn this off. It's a little bright. So this is what we got. We got an inside day. We ended up drifting down to the 70 to the tick. Okay, remember the plan here was this 70 is likely to get tested on the open. There's the stock zone figure there at 70 even, and it just drops right down to 70 quarter, almost to the tick, pushes back up towards 80, pokes through the IB high, so we have range extension up, slight range extension up, 3 ticks. And then what does it do? It migrates across the entire IB range and then extends lower into 65 and a quarter. That's not really expected. And then, as if that's not kind of throwing a wrench in things, we go back up, we push through the mid, consolidate, and then we run up into the close with this high volume close, this high volume point of control at one price. Overall, Friday to me looked like a whole bunch of shuffling around, and that's pretty much it. I didn't see Friday as a clean, clear price discovery. The things to glean out of it is we went neutral. We broke the IB high. We broke the IB low, actually back here. And then we closed above the IB high. Kind of bullish action there. It did test up, tested down, and then it ended up closing near highs. So the expectation is for it to drift higher, and it did. The Sunday reopen had us trading into, let's see, had us trading into 92.50, 10 points higher than the close. So the market ended up drifting all the way up to 92.50 right here, 92.50. And then this morning we're trading approximately, what is that, 25 points lower, 25 points below the high that was put in on Sunday night, U.S. time. So overall, pretty bullish close on Friday, near all-time highs. And then coming in today, we're looking kind of weak. So that's how things have shaped up. Looking at the overnight session, it's tricky when you have these holidays. So this is Friday's action right here. So this is Friday, okay? And then this was Sunday's action. Monday's action is crossed out. It's taken out. It basically traded right in here somewhere. That was Monday's action. And now we have this push lower. This push lower and holding steady sideways near the lows. So in order to determine the overnight high and the overnight low and the overnight point of control, I put in this profile, this made up profile, because I have to combine these sessions. So the overnight high is actually 92.50 versus the one that's shown on your chart, especially if you're using IRT. 33.70 is the overnight point of control, and then 33.61 and a quarter is the overnight low. And so when we look at these these combined sessions, we have a market that is that has a very high volume node. We have two clear distributions, and we are trading in the lower distribution currently. And so right now we're trading at 33.69 and a quarter right in here, and we're trading inside of this normal distribution, which is the lower distribution of the double distribution profile. If I say distribution one more time, I might shoot myself. And so here's the low volume node. So this area here becomes an important area to monitor. This is 79 to 81. 79 to 81. So I'm going to write it here so you have it. 79 to 81 in the S&Ps, likely to be a fight zone, and a push through here is likely to get us through to the 89 and potentially, and that would put us in new all-time highs above what we did on Thursday, which was 84.75. So the all-time high is right back here in the day session at 84.75. Okay, pretty good selling delta. Pretty good selling delta overnight. An overnight inventory is short, expecting a little rebalance on the open. In other words, a slight push up, and then before the market decides what it wants to do. Here's the order flow picture and what it looks like. We reopen in this kind of a big gap down, right, between yesterday's close, which was again a Globex session, which was it continues to be part of Monday's session starting Sunday night and going through Tuesday. So this entire Everything we've traded since 5 o'clock Central on Sunday through now is considered part of Tuesday's session for margin and exchange purposes. You can see there's a big gap down here on the open, and it's just been very, very noisy since. So as we look at the order flow, we see that there's quite a bit of action here. My settings for my order flow have changed for the Bookmap have changed. Those of you who use Bookmap, hopefully, first of all, you're using CT Bookmap. But if you use Bookmap, I've switched to volume delta, reported on the dots, volume delta, smart clustering, and I'm showing all volume because I'm looking at the delta. And these bars down here have been adjusted to reflect the volume delta as well, volume delta versus total volume. So we're no longer looking at volume traded, we're simply looking at what kind of action do we see at the highs and lows. This is kind of an experimental thing that I'm looking at now. It was pointed out to me by someone at Bookmap, and I'm monitoring how that's responding to key areas. Here's the order flow overall. We do have some a little bit of liquidity above at 73 and 75, and then above there 80 to 84. 80 is key here. This is the key area I outlined. If we test up here on the first go, I'm going to be looking to get short on the first try. This is the over underline for me for today. Underneath, we have liquidity of 58, 58 steady, and that's about it. Today, the expectation for today is it's likely to be relatively quiet. We're likely to trade inside of Thursday's range. Not expecting too much in terms of what the market is likely to do. Not seeing an indication that the market is really pepped up to do anything big. So let's move on to our plan for today. Here's what we're looking at for today. Again, we're trading just inside of Friday's range. The expectation is for an open auction in range, out of value, responsive, coming up to this 72 area. Consolidate here. I'm looking for a test of this 75, and then I expect it to stall out and then consolidate for a little bit before it rotates down. I don't believe it has dipped down enough, given that we're still in balance. I don't believe it has dipped down enough for the buy the dip guys to come in again. And then I'm looking for the overnight low, that's 61, to be taken out before it starts to push back up. So overall, looking for responsive buying early, looking for the market for sellers to step back in, push this down towards the lows, and then for it to finish somewhere in the middle today. The second scenario, looking for an open auction that consolidates in here, pushes down, tests the 61, gets responsive, pushes back into the range, and then moves towards that 80-81 area for a test and a consolidation here, and then likely to break through and then sit sideways or trend up. I don't know which, can't read the future, but the key element, the key thing you should be walking away from, and I'll color these in what color? I'll color these in yellow, I guess, is pay attention to this zone here in the 60. The 60 is really important to me as it's basically a key over underline. Below the 60, we may see some pretty good selling. Pretty good selling right back into 33, 37 and onwards. The buyers are likely to fight here at the 3360 area. The next key area to watch is this uh, micro composite point of control right in here at the 75.50, and then the next area up is the 80.81 area. As I discussed, this is a double distribution area and brings us back towards the all-time high so far in the day session, 84.75, and then the high put in overnight at 92. So given how the market has been operating, it has been buying dips. This is still a bull market. We are not far from the high. And so these are the key areas, and how it approaches what you do is what these lines attempt to kind of visualize or plan out, so that when the market is actually trading, we're able to pull the trigger and execute without much hesitation. So that's the plan for today. Good luck, and I'll catch you tomorrow morning. Take care.